Hi, and welcome to another edition of CMS Forex News. I'm Christina Robinson, and today is Wednesday, March 5th, 2008. Japanese capital spending fell the hardest in 5 years during the fourth quarter of 2007. As major importers of commodities, Japanese companies reduced spending in the face of surging oil and raw materials costs. In this monthly chart, you can see the pair is now at a 3-year low. It has plunged more than 1,800 pips since last May. Today, the yen was pressured, and the U.S. dollar-yen pair bounced off the 3-year low. For the past 3 years, carry trade had sped up in the second quarter. On a technical and cyclical perspective, this can be an entry signal. However, this year's second quarter will have a significantly different backdrop from the previous few. The Australian economy may be losing steam after a year of rate cuts. For now, high commodity prices can continue to support growth. The fourth quarter GDP failed to meet expectations and only registered 0.6%. The Australian-U.S. dollar pair initially headed south after the poor growth report last night. In New York trading, however, it took a sharp turn due to unexpectedly weak ADP employment and services data. The ADP employment report registered its first negative reading since June of 2003. Services sector employment was a pocket of increase. Job cuts have been increasing in all other sectors. Labor productivity only increased an annual 1.9% in fourth quarter 2007. In turn, labor costs jumped in the same period, another bad sign for the U.S. economy. As if recent releases haven't shown enough evidence of an imminent recession, factory orders decline. New orders plunged as inventories continued to pile up. On the services side, the ISM index showed back-to-back contraction months. First quarter GDP is very likely to be negative, in which case the U.S. is essentially in a recession. Technicality aside, the fourth quarter can be considered negative growth, if not for holiday spending. However, a recession won't be announced until the summer when second quarter GDP decline is confirmed. The Euro-US dollar pair broke last week's record highs and reached 1.5300 at noon in New York. The combination of poor releases trounced the greenback as it depreciated across the board, with the exception of the yen. New Zealand will announce its interest rate statement tonight, which is expected to be a hold of 8.25%. Australia reports on building approvals and trade balance. Overnight, Japan releases its leading index in machinery tools orders. The Bank of England and European Central Bank are both expected to hold rates as well at 5.25% and 4%, respectively. Canada will release building permits data and IVPMI. The U.S. will wrap up the session's news with jobless claims and pending home sales figures. And that's all the news today for the Forex market. Join us again tomorrow as we review 3 interest rate decisions and their pursuing statements. Thank you for watching. Join us again right here at CMSFX.com.